Hi, welcome to the Market Alert for Monday, the 9th of August 2021. So listen, hold on to your hats. There's a lot to cover in this alert. Awful lot going on from Friday and overnight. But let's start off with Friday and work our way through. So bonds, bullion and big tech battered after big jobs beat. Dollar and small caps soar. Good news is bad news for bonds and big tech. Now, on Friday in the market alert, I said that if those numbers, the jobless numbers, came out higher than forecast, then we would see the metals market slam, the stock markets go to all-time highs, and that's precisely what happened. We can see there July payrolls beat expectations, rising 943,000 as unemployment rate tumbles. You've never seen such BS in all your life. Not quite 1 million, but probably close enough for the Fed to signal tapering. Not a cat in hell's is that going to happen, and neither are interest rates going to go up either. Something is going on. I don't know what it is, but there is a gut feeling that something is going on. I looked at the implied volatility on Saturday morning. I always update everything on a Saturday morning just to make sure I'm ahead of and ready for Monday, and I couldn't believe it. We've got the Dow making a new all-time high, and the implied volatility is being marked up from 1441 to 1852. Now, why would this happen unless there's something coming down the line? It just doesn't make any sense. Are the option sellers nervous? Something doesn't stack up. This is not the right relationship. When markets go up, the volatility goes down because there is less risk. The market's making new highs, and so on and so forth. So there's no risk to the downside, i.e. crash, correction, and so on. And yet the implied volatility has gone up. So that was the first warning signal for me on Saturday morning when I looked at this. I'm going to skip ahead. I'm going to come back to the metals later because if you've been watching this overnight, you'll already be aware of what I'm going to be discussing about that. But let's just move along and see what news we've got today, and also for the week, really see what the big ones are going to be. We've got FOMC Bostic speaking today. We've got the JOLTS jobs opening from the US. These are both at 3 p.m. So that's today's news as far as when the markets are open. And then we've got another Barkin is speaking. Now this is interesting as well. We've got a lot of Fed speak today. Tomorrow, nothing so much there. And here we go. We're back to CPI for the US on Wednesday. So that's going to be interesting as well. Again, we've got another Fed member on Wednesday. Thursday, we're looking at the CPI for GDP and PPI. We've got CPI for the start again, Keith. GDP for the UK on Thursday, and then PPI for the US core PPI. So it's about inflation, then, isn't it, this week? This is the biggie. This is the biggie for this week, and you'll see why I'm saying that when we have a look at the metal. So that's the big one. Let's have a look at the Dow and see where we are. So on Friday we can see that we made a new all-time high for this market. Went straight through the 89, straight through the old all-time high. It's just insanity, isn't it, when you see this? But like I say, they'll let the metals go up when they're ready, and they'll let the stock market go down when they're ready too as well. But at the moment, we're still seeing the insanity on the upside. However, it's not looking too strong on the daily chart at the moment, so we could see some sort of a retracement, which is not uncommon when we put in a new all-time high. And there is a wonder on my part of why the implied volatility is being marked up as well significantly on Friday as well. So unless there's some nervousness about what's coming down the line, another big increase in inflation, who knows? But certainly I'll be keeping an eye on this one, but not looking too strong on the overnight there. We'll look at the 30-minute chart. You can see they just blasted the market higher as soon as they got the news, and then it didn't do a lot. And that's another interesting thing as well. I thought this would have continued all the way up to the end of the session on Friday, and it didn't. In fact, it actually retraced a significant amount, and that's why I think there's something very strange going on behind the scenes. Why didn't they use that news to move the market up, way up a lot higher in the daily chart through here? It's hardly a convincing move just coming through there, is it? It's got all of this resistance and it managed just to put its head above the parapet. So something's not right. And the other thing you've got to look at and say, well, what news have we got coming down the line that is positive? Well, the only one is going to be the infrastructure bill. I think it's 3.9 trillion, certainly over 3 trillion. Whether it gets through or not is another matter, but I suspect that it will. But that really is the last stand for the stock market. How much more do you print after 3.9 trillion and all of the trillions they printed last year, which I think was close to 9 trillion. And they're still printing every month 180 billion of QE, so it doesn't make any sense. Doesn't make any sense at all. But then I suppose it's not supposed to make any sense when it's being manipulated, because of 30 years of trading, we lost the free markets 13 years ago when we had the 2008 crisis, and ever since then it's been manipulated. Anybody that's followed me since then will know that it's just a case of you've got to keep buying the dips and moving to the upside, even when you think that it can't go up anymore and you start to see it go down. You think, well, okay, and then the next day they reverse it and bring it back. It's to keep the illusion alive, make the 1% richer that are all invested in this area, and the illusion that the economy is fine with the COVID crisis in the background. And I've maintained, and I said this last year in the market alerts as well, it's been hijacked and being used as a way of bringing in a new financial system. And we saw this last week with Sunak talking about the Bitcoin digital currency, and I forewarned people about this as well, that everything that you spend you will be monitored with. That's where we're heading. The whole thing is tyrannical. The COVID rules, regulations, everything. If you can't see it, then I'd be surprised if you can't see it, because it's just blatant what is going on. And again, the hijack from the World Economic Forum as well. Klaus Schwab said himself that we must seize this opportunity and make the most of it. So let's move on to the DAX. This didn't quite get to the all-time high. You can see stopping at the previous all-time high, and also showing some weakness there as well. Came close but didn't quite manage it. In the 30-minute chart you can see that it followed the Dow up initially, hit this BRN here at 15,800, and then the market also moved lower and has moved lower on the overnight as well, down to Friday's low, where you can see, as I've said before, the low is the most important area in a chart from the previous day, and you can see them bringing the market back off this at the moment. In the 2-minute chart, not a lot to report at the moment, because the market's sideways, which you can see there, having brought the market down to the low. You can see the cluster of volume down there as they've brought it back above the low, and the 200 MA at the moment. Now let's move on to the metals markets. Let's start off with silver, and yes, what you're seeing here is correct. Now again, in the market alert, I have said many times, the way that they were dropping silver, they need some serious shakeout to move this market back to the upside. Well, that came true last night. It started on Friday, and what I'm going to do is just to show you a couple of things. I've been looking at this. I couldn't believe it. I woke up about 3 a.m. I thought I'll just have a look, see what silver's doing from Friday, and there was an alert from Arcadia Economics. It said silver smashed at the open. I thought, well, this is going to be interesting. So as you can guess, I've been awake since 3 a.m. Just watching. It's a shame I wasn't awake an hour earlier when they actually slammed it down to this level, because I could have bought. When I actually looked at it, it was already back above $23 an ounce. Now, on Friday, I warned that they would use the news to move the market lower. And if we just go back to that news, in fact, let's just go back to here and move back a week. I think that was it, wasn't it? NFP numbers. So the forecast was for 870. It came out at 943. So it's about 60,000 more, isn't it? Some give or take 70,000 extra jobs that were created. But it's irrelevant. It's irrelevant. All they did was use that information to simply slam. I'm just trying to find the chart again. Just 1 second. To slam the price of silver. Let me just reset the chart. That's a lot easier. So Friday they just managed to move the market down. It never stopped, and then we managed to find some support at the obviously down towards the low on Friday session. I was surprised we didn't actually get down to this level, but we didn't. The market found support, and then overnight you can see that they've just absolutely slammed prices lower. But let's just go back to Friday for a second to just show you something about this manipulation. This is the open interest of the CME, and this is Friday session. We haven't even got what they've done overnight to take into account. Now on Friday they traded 131,000 contracts in volume were sold on the COMEX exchange. Well, let me just grab this and show you what that translates to. So we've got 131,000 contracts, or just over. Each contract has a value amount of 5,000 ounces of silver, giving a total of 655 million ounces of silver traded. The amount of silver mined each year and in circulation is 27,000 tons, which equates to 952 million ounces of silver. So I'm not going to say anymore. I think it says exactly what it's showing, that you can see that the amount that was traded on Friday, and this is paper silver. Nobody sold physical silver into this market. This is a derivative. This is the banks being able to use the futures contracts, 131,000 of them, to slam the price down on the pretext that we had 70,000 more jobs than were forecast. And that was used to slam the price of silver. And I can't wait to find out what they've done on the overnight, or what the excuse is. I mean, there's one thing for certain, it's very thinly traded on the overnight. As you can see, a silver update. Let me just see if I can move this down a bit. There we go. Silver update looks look at gold and drops hold my beer, because that's the move that was forced overnight. And the same with the gold price as well. Early week gold trade is seeing a large fall in prices. Oil is down, commodities more generally looking in trouble if gold is anything to go by. So again, but for what reason? The unemployment figures were better than forecast, and the Dow makes a new all-time high. But as soon as you start to peel behind all of this, you can see exactly what's going on. And if I was to hazard a guess, I would also have a look at this as well, because on Sunday, this coming Sunday, will be 50 years since the gold standard was removed from the US dollar. Now, whether this is sort of a celebration for the bankers and slamming the price down so they can buy it cheaply, knowing that they've hit 50 years now with no backing, and they've just printed trillions and trillions and trillions of dollars and more to come. Who knows? But absolutely fascinating that this actually ties in more or less with this next weekend, the 15th of August 1971, when Nixon removed the gold standard. So I don't think it's got anything to do with it. I think that's just pure coincidence. Now, if it was a week today after, then I would say there was. But I just thought it would be interesting to see that as we approach the 50th anniversary of the removal of the gold standard, that this is happening. So yeah, we're going to have to wait and see how the market pans out during the day. But if you have a look in the smaller time frames, you can see exactly what they did there. The Asian market, it's not uncommon for this to happen on the Asian market, but I haven't seen this for a very long time. And certainly, like I say, with a 70,000 above target for the unemployment figures, I mean, it is complete and utter I really want to swear, but I'm not going to give them the benefit of it, and there may be some younger listeners, but honestly, it is enough to make you swear with the manipulation being so blatant, and that's why I'm spending a bit of time on just bringing this to your attention and showing you the figures. So they can do anything they want. If they removed the silver and gold derivatives, these prices would be vertical, and it's the suppression. And as what's his name? God, I can't think of his name. It keeps coming out. They only wheel these people out when they want to prove there's no manipulation. I think it's Jeff Christensen or something. And he's and also the chap from the CTFC came out a few months ago as well. He said we have the tools to tamp the price. I mean, again, it's hidden in plain sight what they're actually doing. But anyway, let's see what happens there today. You've got gold doing exactly the same. This has come down to the March lows. Silver, by the way, came down to the November lows. If we have a look over here, I'll just grab this a bit more. And there you can see that's the low there, which was back in 30th of November. When we were at $30, they try, when the Wall Street bets were trying to move the price to the upside. And if you go back and look at the market alert on this day, you will hear me say you've got no chance taking on the banks to manipulate it. You might be able to do, what was that company called? Game something or other. But there was no way you were going to stop the bankers, because silver is a monetary metal as well as an industrial one, and it was used and part of the founding fathers. So yeah, they can't let the price go above that $50 until they're ready to let it go above that all-time high of $50 in 79 and in 2011. But one thing that I will say, and then before I move on, is this is a classic. I don't think it's to shake out the longs. I think it's a case that the shorts wanted to get out at a lower price. They've seized the opportunity. The news from Friday, the spillover from that to thinly traded market, slam the market down, sell billions of ounces of silver futures, not silver physical, futures, drive the price down and bring the market back to the upside there. So the dollar gaps higher and is starting to move down. Again, it's filled the gap. This is a classic as well, isn't it? Gap the market higher. Everybody thinks the dollar's going to go up because it responded with moving higher on Friday, forcing the silver price and gold price lower. And they gap the market up on the Monday, and traders buy into the gap, and then they bring the market down. So there we go. That takes care of the metals, what's going on there. Fascinating, if nothing else. But you've got the manipulation in the stock market with prices being moved to the upside, and you've got the metals being slammed on the basis of a 70,000 better than forecast jobs number. Right, Friday's trading session then. Let's just have a quick look through this. I've taken up more of your time than I wanted to, but like I say, an interesting turn of events overnight. So we can see the futures market moving higher on Friday in the pre-market, obviously, and trading up to the high, which is the orange line on the chart there. We kick off with the market trying to move higher. We had a potential buy signal. We knew the market was going to be waiting for the non-farm payrolls and likely to be sideways. But they did come back after the losing trade there and then move to the downside, which I'll just continue to show you there. Recouping some of the profits there as the market, or the losses I should say, as the market came back to the BRN. Notice how it stopped at the 200 MA there. So let's fast forward through the market coming back. This is interesting as well, because we came back to the 20 bar moving average, closed through it, then closed back, and then closed back below the high, and then headed down towards these fibs as well to the downside there. And you'll see this time the market takes them out and then starts to trade sideways. It's amazing how sideways the market was there, and for how long as well. Prices then moved sideways too high. They brought the market back, but in a narrow range, waiting for the news, which I'm going to fast forward to that came out at 130. So let's have a look at the market's reaction to this. We know what the news was. We've already been through this. I did save it for here, but because of what's happened overnight in the metals markets, I want to look at this beforehand. So you'll see the market move higher there. There's the news just there. Let me just grab this. You've already seen this, but there you go, just so that you can see. And the market then, again, still stuck at that resistance at the 777, and then the market moved all the way through, started to trade to the upside, and this is the all-time high, the R2 and this orange line, and the market failed to get there. It stopped here, retraced 89%, and then started to move to the downside. And it's not uncommon to see this happen, just like the Dow when it moved lower after actually making the new all-time high, because again, if you apply logic and common sense, who in their right mind is going to buy when the market goes through and makes a new all-time high? You'll only buy it off a correction or some form of pullback. That's the safest way to do it, as opposed to chasing the move. So on this, the market came back. I decided to get out. It was doing absolutely nothing, and again, that was interesting. The metals were being smashed, and the stock market had made its new all-time high, and then it was going nowhere and just drifted sideways. And then we got towards the end of the session, and the market then moved lower, as we saw after the 4 p.m. cut-off time. Okay, that will do it for this one. I'm 20 minutes in here, so yeah, I'll call it a morning on this one, and let's see what happens today when the metals open on the COMEX around 1:30. Well, it'll certainly be interesting when it does. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.